Hi everyone, today we talk about Cambridge IGC and accounting. So today we have the fundamental of accounting. The process of accounting means the bookkeeping involves the collection, recording, storage, and supervision of financial transaction of a business. One minute, please. Here now we talk about what is the term, the important terms. Okay, so bookkeeping involves okay. Now, bookkeeping involves the collection, recording, storage, and the retrieval of financial transactions for business. So you need to involve what? Collecting, recording, storing, retrieving of financial transaction for business. Mean I need a whiteboard for a while. So no whiteboard. Let's say that we have a business. Okay, Muhammad has a business with a capital what? Capital of what? Capital 45,000. Okay, this is a statement. Good. But okay, here now the bookkeeping. What should he do? He should to make it now. Here it is. Then text here. 1 minute. Trying to discuss to you. That is all. Okay. But that is not for now important. But let us see. Here is what? Here is Muhammad account. No problem. Muhammad account. So here will be this date when he at 1 October 1 October 2014, for example. Good. For now, we put click here, then text, then that is all. I don't want to make anything else. Then October 2014. October 1 2014. Good. Is all. Then what I will write here? I will write here the details. Capital. Here would be the amount. Okay, $450. Then we will make another account for capital, which will put here. Here it will be a liability, and the capital would be an asset, which we will learn in another chapter. The chapter of the accounting rule will have that. But now we would discuss the difference between bookkeeping and accounting. Bookkeeping involves, we discussed that. Now accounting. This is accounting. First time saying it. It is all I do. Accounting. The process of collecting, recording, summarizing, classifying, analyzing, interpreting, and communicating financial data in order for what? In order to follow it, or to allow communicating financial data in order to allow the user of accounting information to make informed judgment and decision. So that's the process of collecting. You will collect the data, then you will record it, then you will classify it, then you summarize it, then you will analyzing, interpreting, communicating. For what? For what is the reason? That allow the user of accounting to judge and to inform the judgment and the decision, to make his own, to make his informed judgment and decision about that business only. Financial statements are made up of two statements: the income statement and the statement of financial position. Financial data refer to what? To any aspect of a business that can measure in terms of money. For example, here. That is here. I said here. Oh, 1 minute. Okay. That this here, this $45,000, which is mean that is what? Financial data. That is the financial data. You understand it? I hope that. Now we will go for a difference. What is the difference between bookkeeping and accounting? What is the difference? After that, we go to definition of accounting, which will have this all. Then we'll go and for solving, if you want solving that. Okay, then we'll go to the purpose of accounting. Then the purpose of measuring is profit and loss. The role of accounting in money decision making, which have some steps and somehow. Then have some questions after. Then we see the interest in the accounting equation. Accounting equation is easier. It has some meaning, but unless it is easier. I need that. Now, bookkeeping. It is larger concerned with the development and maintenance of accounting record is what concerned with the development and maintenance of accounting record. So what this involves, the detailed recording of all of financial transactions that have taken place over a period in a business. So every transaction of economic value should be recorded, otherwise it could get forgotten. Why it is important to record every transaction of economic value, as otherwise it could get forgotten and omitted. Okay, so bookkeeping is important as what it ensures the recording or record all financial transactions so that the business has undertaken and accurate, up-to-date, and comprehensive. That is all. Accounting. What is involved? Accounting involves collecting anti-financial data, collecting, recording, classifying, summarizing, analyzing, and interrupting. That's all. I think it is here. That is all then. Accounting involves collecting, recording, classifying, summarizing, analyzing, and interrupting financial data. But accountant use bookkeeping record why to prepare financial statement at regular intervals. Now here you can make many questions. For what is the reason of using the bookkeeping record to prepare financial statement at regular intervals? So easy. What these statements are then analyzed and interpreted to aid decision making. That is all. What this statement are then analyzed and interpreted to aid decision making. That is all. Then clear all drawing. Now mouse. Definition of accounting. Accounting is a process of collecting and recording financial data. So when someone tells you define accounting, we define is a process of collecting and recording. Let us put counting is the process of collecting. Oh, what? Classifying, summarizing, analyzing, interrupting, Now I am sorry, but we have 5 minutes, so we discuss collecting encoding financial data, a part here in the accounting definition. So every business needs to collect financial data and then record this data. So the data comes from the transaction which a business undertakes daily. So here's some important notes. 1 minute. Every business needs to collect financial data because the data comes from the transactions which a business undertakes daily. So the financial data that would be recorded from this transaction would be an increase in the total sale and an increase in the amount owed to the customer. Forget about that. Where is okay, no need for that. So let us discuss which I put it in boxes. So every business what needs to collect financial data. We collect the financial data, mean the transaction that they do, and they record the data. Then the data comes from where? From the transaction which the business do it daily. So the financial data that would be recorded from this transaction, what would increase in the total sale and increase in the amount owed by customer to the business. Owed mean that the customers have money to give it to the business. I mean, I pay something for 400. Okay, I have 350, for example. So there is 50 owed by the customer to the business. So $50 from the customer should give it to the business. That is all. I hope that you understand part A in collecting and recording financial data. That is what I hope. B and the others will be in another part of that lesson. So please don't forget to subscribe to my channel. Don't forget to subscribe to my channel, put like, and put your ideas in the comments and say if my video is good or not. For now, I would say goodbye.